not contagious though, I promise you that. Okay? I've got little ones in my house from 2 to 7. So at this time, there's no way to stay away from what they're bringing home. So, but I'm not contagious, I promise you that. But so my name is Jon Shrum. I'm with JMJ Financial. I am a part of JMJ Financial. And JMJ Financial we're direct lenders. We were developed back in 1992. We fund with our own money. We process, we underwrite, we do everything in-house. We are not servicers, nor do we ever want to be servicers. So we are a mid-sized mortgage bank, which Anario was so nicely to point out, that still makes us competent. Okay? So what is it that we can do for you? I mean, honestly, what is it that a lender can do? Well, obviously, it's important to make sure deals are closing on time. We all know that. It's important that there's customer service and that your clients are being communicated to. We all know that too. Well, what can we do to help you increase your business? What makes me different from other lenders out there? I think the major difference between myself and a large bank or a broker is being that we handle things internally and that we fund with our own money. Being that we have a AAA rating with the 300 different investors that we sell our loans to. So I just want to reiterate that. I don't hold loans. JMJ does not hold loans. We service those loans. But being that we have a AAA rating, when we package a loan, we've got a 96% chance that we know that that loan is going to go through. So if I've got a hard deal, and we've got to get it done, I can go to my investors, I can go to the partners at JMJ and say, look, we know this is a sellable deal. Let's get it done. Our average close time is between 14 to 15 days. It's no joke. Our FHA, we can close in as little as 5 days. In fact, a couple of realtors in this room, I've closed FHA deals for them in less than 5 days. So a lot of times I get the phone call at the very end after the deal's been in for 30 days saying, John, can you save us? Which is great. I love to be under fire like that, but please call me first. And that way you guys won't have to wait the 30 to 60 days, okay? Things that have changed in 2013. What can we do to help improve your business? Big things for us is consecutive seconds are back. I don't know if you guys know that or not. The 80-15-5 is back, where people come in with as little as 5% conventional and they have consecutive seconds behind it. How does that help you? Well, loan amounts haven't changed, right? We still have a conventional conforming at $625,500, FHA $729,750. So if you have a client that doesn't want to go FHA, they possibly are in the jumbo world, we can drop them back down to the 417, or keep them at a $625,500 and put a second behind it. It makes a big difference for a client that doesn't want to qualify jumbo, that doesn't want this jumbo interest rate, they want to take advantage of the conventional interest rate. Okay. So the areas we specialize in, FHA, conventional, jumbo. There's not a whole lot that we don't do. We also have a stated income program. That's right, I said it. We have a stated income. Look, all the heads go like this, huh? What? Yeah, we do. We have stated income, okay? Being that we're AAA rated again, we have investors that have picked us. We're probably one of maybe 5, I think, in Southern California. We do 30%, 40%, 50% down. 30%. They're going to open a banking relationship with that investor. They're going to put $100,000 in the bank. Okay, so this is not for somebody that is W-2 that makes $20,000 a year, guys. This is for our self-employed people that obviously, when Steve looks at their tax returns, they tell us they make gross $1.5 million and they net $50,000, whatever it may be. Okay, but we know that the income is still there. I know that people are actually bringing that income home. That's why I feel safe and confident that we can still write that loan and we can state the income. We also do a stated income or a no income verification for foreign nationals. And absolutely, that means we state absolutely no income on a foreign national, yes.
What's the processing time on foreign national loans?
What is the processing that's done on a foreign national loan? Well, being that it's stated income, all we're going to be looking at is their assets. Okay? They do have to establish some United States assets, but if we can source the assets coming from the other country, then we'll be okay. And that's a big predominant of the stated income loan.
And that's 100% foreign nationals, no social security, no legal presence in the United States.
That is correct.
And who are the vendors, who are the financial institutions that you work with?
Well, that's my secret. I can't tell you.
They work with New Kind Financial?
ING is one of them. Bank of the West is one of them. And also HSBC.
And that's 100,000 relationship, right?
Yeah, no, that's it. We've got more than that. So, I'm sorry, $100,000 with down? No, they're 50% down for your foreign nationals. Minimum of 50% down. The kicker, guys, to stated income is that they have to have a certain amount of assets. Yeah, I mean, you're going to be looking at these people don't qualify based on their actual, I shouldn't say actual, their documented income. they're going to qualify on their assets. So we've got to show 3 months of assets. Okay? If there's any sourcing issues, we have to take care of that right up front. And they're going to have 3 months of reserves, or excuse me, 3 months of bank statements plus 12 months of principal, interest, taxes, and insurance. So again, guys, this is not for the person that makes $20,000 a year. This is someone that has substantial assets that wants to take advantage of the stated income type program where they can get into that one that they want to get into. We are also working on investment. Don't quote me on that. I'm trying to get it right now. We can use stated investment. Okay. So that's just one part that we do. Go ahead.
The foreign nationals, how's the interest rate compared to?
Depending on the program, 3-year fixed or down to a 5-year ARM. The interest rates can be anywhere from 4s to high 3s to high 5s. It all depends. So if you have questions about that and you really want to talk about it, please grab me after. Okay. So that's only one thing that we do. Another area that we specialize in is the first-time home buyer, guys, and that's something that's dear and close to my heart. Just to let you know, I've been in the industry now for almost 18 years. I look a lot younger. I'm actually older than I look, I guess. So I still have some gray hair. So. But first-time home buyer for us is extremely important. And being that you have the partners that you have in the room right now, they're all part of my team as well. So one of the things that we look at for first-time home buyers and people that are coming back into the market is what can we do to help them put them in a position where they can buy a home. Well, obviously FHA is a very big program right now. It has been for a long time. We haven't seen any changes in 2013. The MI has stayed the same. The upfront MI has stayed the same. We've seen a jump in it, obviously, in the last couple of years, but they're still coming in with a 3.5% down. Interest rates are phenomenally low on FHA loans, so it is not unusual for me to personally make sure that if a person does not have their closing costs and they've only got their 3.5% down, we as a lender will step up and we will take care of those costs for the client. And if it makes a difference between them either getting into a home and you guys not closing the deal, then we're going to make sure that we get it done. Okay. Another piece for us are folks that are coming out of the market that want to get back into the market. The short sales, the foreclosure worlds. I'm here to tell you, and it's being videotaped right now, so I'm sure it's going to be all over YouTube, right? That you can, if you short sell your property or your client short sells a property and they make those payments throughout the short sale process, it's a keynote here, guys, that they can qualify the day after they close on that short sale and do an FHA purchase, owner occupied, all right? They've got to make their payments and they can't have any derogatory credit right after the short sale. Obviously, if they've jacked up the credit cards and now they've got $20,000 in debt, it's going to be an issue. But if you've got folks that look, they're upside down on their property, they're never going to get the equity back. They're so far upside down, they're never going to get that equity back. They're still in a good financial position, but they want to get out of this home. But they still want to have ownership. They still want to have that reduction in the future and that tax write-off for them, or they just want a new home for themselves. As long as they make those payments, they can definitely get into that new property, literally the day after they close. Okay. Question?
I was just going to say a comment. What he just said, I've had arguments with realtors and brokers that say that doesn't exist, that the homeowner has to be late in order to qualify for the loan. And with you guys being the processors, that is totally wrong. You are shooting yourself in the foot by being able to by basically eliminating your ability to resell that homeowner a new home.
Right.
So please, please, please do not tell a homeowner that you have to be late in order to qualify for a short sale. Because John, here's your finance guy and your short sale gal. Yes, you can, as long as they meet the criteria. That way you can tell them, yes, the short sale's not going to work out, but short sale will work out. But let's help you transition into the new home. You're dual closing your short sales. Imagine that.
Should we just open it for questions? I'm a lender. Start shooting me with
The
questions.
question regarding the buying of the other property all depends how upside down you are. Let's say you own $500 for the property worth on this $250. That affects your ability to buy. If you are upside down.
If you're short selling the property, no, it does not. Absolutely doesn't. It's not going to affect you in the future because you're no longer attached to that property. Again,
to get the loan, do they see how much you own?
when you talk about actually getting the approval for a short sale,
The next loan for buying the next loan.
the next one, no, it will not affect you. It will not affect you because again, you're short selling your property, but you've made your payments throughout that process. So, I mean, people, here's the thing.